Well, hello everyone, and welcome out to your midweek currency room. This is Ankit here, and I'll be going through what's happened in the market this week, and most importantly, talk about our upcoming 24 hours, upcoming events, and then talk about our plan for rest of this week. You know the deal. As we go through all the class here, if you have any questions, just go ahead and type in the chat box. What I'm going to do here is take a look at the broader market analysis, then we'll take a look at currency baskets, take a look at the news, and then we'll take a look at some setups. And then if you have any setups that you want me to take a look at, just go ahead and type in the chat box. And we'll take a look at it as we look at the charts.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
All right, so let's just jump into the market analysis. Well, what a week so far, and hope everyone is enjoying this week because we get these dull periods in markets and then we get good periods in markets, and so far this is definitely a good period in the markets. Now, looking at the events here so far for the news. Again, I think it's a pretty good movement so far. The US dollar has strengthened after strong economic data, but again, we saw the US dollar was actually doing well way before that. Throughout the week, dollar has actually done really well. We'll talk about more about the dollar, but again, I'm not surprised. Dollar is actually showing strength. It's just the way it's moving. It is, we had a pretty bad week last week, and it just rebounded off of that. A lot of movements there. We had Bank of Canada today. They held interest rates steady, no change whatsoever. Again, we have 3 central banks this week, and that's exactly what we expect. We don't expect a whole lot. The only thing that we look for is what's in the statement. And are they more hawkish or bearish? And again, at this point, none of them are hawkish. They are more on the neutral side, mostly. Now, we have the Aussie CPI last night that came in weaker than expected. So again, that's really where the movement has been. So if you take a look at the numbers today or this week, this is weekly numbers. You can see dollar actually has done the best, 1.45%. Now, this movement dollar is, I actually was looking at the numbers, and this is, again, one of the best moves since, I think, February, if I'm not wrong. We'll take a look at it, but again, percentage-wise, pretty good week so far. Now, outside of that, we have Japanese yen, which slightly higher. Again, I think yen really hasn't moved much. We have the Bank of Japan tonight, and we'll probably see yen move more in the second half of this week. Now, where has the weakness been? And I think this is where the best move have come so far. And again, this came way before these news events rolled out. Monday and Tuesday, we had the Euro EU deal, and that happened over the weekend. And pretty much we did see a little gap higher. And then after that, everything just tanked here in the European currencies. So you can see that, on the news, the European currencies are being the weakest. This is where the strength has been, and now that's really where the weakness has been. So we'll take a look at the charts and see what has changed from the directions standpoint. While the euro and the pound is kind of taking the seat, euro and the Swiss franc, pound is kind of fallen back here a bit. Pound still, I like it more to the downside, but you can see right now it's not really showing that much of a weakness. Now, Canadian dollar is following the path for the US dollar, but you can see there's definitely a bit of a divergence between these two. Overall, CAD, again, is being supported overall. Now, where the weakness coming in a little bit today is the Aussie and the Kiwi. Again, I talked about Aussie CPI last night. It came in weaker than expected. Kiwi has been, constantly moving lower, but again, nothing too big. This is where not the big move has been. Again, so far, Euro and the Swiss franc is really where the big movement has been. Again, we still have a lot to go through as we get the FOMC just in less than an hour. We have the Bank of Japan tonight. We have the employment report on Friday. Still a pretty busy week, and things can really change. So we'll talk about the upcoming event here. Now let's talk about broader markets. You can see that broader markets are not moving as much. You can see the S&P slightly down, World Stock Index slightly down. Again, these are not the big numbers. Oil definitely had a big jump, but outside of that, these numbers are pretty range bound there. Now, taking a look at the crypto market, seeing some pullback here. Again, after some really stellar performance, we expect some currencies to kind of give back some of those gains. So that's exactly what we're seeing here. So we'll talk about broader markets here. Again, anything has changed? Nothing really has changed. The broader market continues to be on the upside.
Do you want to be
the market sentiment is there. Now, when we talk about correlation,
Maverick Currencies
how
is the
relevant
oldest
is this information
US-based
for
Forex
us? And I think right now correlations are just not working.
Pay you for trading
I think
with
this is
our
a good
capital.
environment where you just pay attention
Trade
to
our
relative
capital
strength of
and keep
weakness
70 to 80%
instead of the broader
of the
market
profits.
sentiment.
We
Unless
are looking
broader
for
market
traders
sentiment
just
changes
like you that are
drastically,
hardworking
that's where
and
we'll probably
motivated.
see more
Click
of
the
that
apply
price
link on the
action or
top right of this
correlation
video
coming in play.
to see
But
if you
since the
have what it
volatility is
takes.
pretty low, we don't expect a whole
That
lot
link
there.
takes you to a
Now, let's just talk
video
about
that
news
explains
events.
the trader position
In the news
available,
events, you can
and
see
you
this
read
is a
list of
very
FAQs
busy
that
week.
answer pretty much all
Now,
the
we
basic
have a lot of
questions
the
you have
data
at this point.
already out of the way. It started
After
like
watching the video
over
and
here,
reading the
Aussie
FAQs,
CPI.
if
This
you're
was
interested,
below
fill out an
expectation.
application,
And I think
then
this
you'll
is going
watch
to
the
weigh
full
down
length
on the
recruiting
Australian
video,
dollar
and then schedule an
for the
interview with
RBA
one of our
to
traders.
cut rates in the upcoming
Are
week
you
meeting.
our next trader?
Last meeting they held, but I think in the upcoming meeting, the expectation, remember, currencies kind of move on expectations. So the expectation, if it started to go more on the bearish side, was start to see that reflect in that price action. Now, we had some economic numbers out of the U.S. As you can see that the ADP numbers was stronger than expected. We had the GDP that was stronger than expected. Again, they were expecting a 2.5, came out at 3. So as you can see on the US front, everything looks pretty good here. Now, how is that going to impact the FOMC today? We'll find out. Not really seeing a whole lot of price action in the bond market, but I think that's really what we will be paying close attention to. Like I said, Bank of Canada already out of the way. FOMC, again, I think it's the statement at the press conference that we're going to be taking a close look at. And then tonight, it doesn't end here. We have the numbers out of China, but I think most importantly, coming out of this Bank of Japan. Again, these numbers that comes out sporadically. I think around between 10 to 12 p.m. Eastern Standard Time. In between that, we'll see the numbers come out. Again, this is the one that I don't expect a whole lot of change. I won't be surprised if the yen sells on that news. But right now, there's always those potential risks that we have to be prepared for. And again, honestly, we haven't really seen yen move as much, but something we'll take a look at. Now, when we go into tomorrow, we have still quite a bit of data. You can see in the next couple of days. Tomorrow, we got the CAD GDP, but most importantly, this price index from the US, and then we have the unemployment claims. And then on Friday, most importantly, this jobs number. So the way we are right now, markets have had a good job so far. Again, things can change quite drastically, and this is where we got to prepare for the upcoming events. So far, let's talk about where the velocity is. You can see that velocity, dollar is really performing well here. Yen is number 2, and then we have seen pound and the CAD. Now, European currencies is really where the weakness has been so far consistently, and then we are seeing a lot more weakness coming into the Aussie and the Kiwi today. So overall, it's pretty split here. See where the strength is and where is the pocket of weaknesses. Now, let's just jump into possible trades ahead, take a look at live markets here, and then see what's really moving. All right, so here we are. We got the charts up and running over here. Now, if you have anything that you want me to take a look at, just type in the chat box. I'll take a look at those as we go. I'm going to start more from, again, we already looked at broader markets. Not a whole lot happening in the broader markets here. So I don't really expect much happening here. Again, looks overextended, but nothing too big going on here. But in currency markets, let's just start with the bond markets here, because what happened is when we take a look at these events, the bonds will move, and that will also move the US dollar. So you can see that the numbers that came out today, and what I'm finding interesting is so far we have seen the bond market has done really well. and we have seen the the dollar has really sort of taken a back seat. And right now, you're seeing the bond market's kind of holding it there, but then we're getting this a lot more movement in the dollar. So here's the bond market here. You can see that we had the move today, but it hasn't really gone anywhere. So not a whole lot of happening there. If you look at the bond market here, it's kind of sideways for the most part. So this will again drastically change based on what the FOMC says, and also based on what the data comes out. So keep an eye on the bond markets here. But let's just talk about the dollar. And dollar again, take a look at this one. Remember, I talked about this in the last couple of weeks, and I was like, hey, this is a nice little uptrend. We'll see a shallow pullback and rally. I think the only thing that got different over here is that this pullback was way deeper than what we anticipated. 1, 2, 3, 4 days of down. And after that, you can see it's on almost a 5 days of run. And also getting us above this previous high here. We just made a little new high. Now, if you take a look at the weekly performance today, you can see that we are on the track of the best performance, pretty much going back all the way to February. This is where we had that big move right over here. And this is again, after that, we're seeing the best move here. So the dollar definitely has the potential, but again, we've seen this inconsistent play. But is this a time to start buying? Is this where we see a shallow pullback and then more rally here? That's really where get a pay more directionally. But again, I think right now we are right above this moving averages. But take a look at this little cross happening here. The 20s crossing over the 50. Usually that's a bullish sign. So I think I do like the dollar here. And again, the best ones would be like where it does pull back, but then the pullbacks are shallow. That's where that's really the direction has changed. So so we are already sitting at levels for the best week. Now the big question comes is that where do we go from here? But this is where you can see that we had a nice move pretty much even before the news event came out today. Dollar was actually looking pretty strong. So we have cleared out the resistance. Now this prior resistance is going to be the new support. Now, as long as the price stays above it, I think that's, I don't mind if this pulls back. I would actually like it pull back a little bit so I can buy into. But at this point, it did clear out some of those highs there. We do want to see, maybe a shallow pullback like this. You can see how small of a pullback that we are seeing in this run over here. So prices do look extended. At this point, if I had to get in right now, knowing where we are, I would be a little hesitant to, jump back in because again, I think the chances for a pullback sort of rises here a little bit. But as we go into these news events, we want to treat them as like any other news event. You want to take a look at what the initial price action is, look at the highs and the low, and then look for the continuation. Right now, you can see we are already sitting at some highs, so I won't be surprised we see some correction. But the big question is, should we buy any dips coming in? And like I said, what I'm really looking for here, this is again a daily chart. I want to see this stay above this resistance level. And as long as it does that, I think a lot of these dollar setups are looking pretty good here. So that's where you start to look for those continuation patterns rather than range bound price action. So that's really where we are with the dollar. Now, another big movement that has happened this week is the euro. And you can see that euro had its biggest move pretty much this year since January. That's a big move here in the euro. So now question is this the end of this run? Well, usually, this is a very bearish engulfing candle. What do we want to see? I think definitely the momentum is turning a little bit. I would love to see a bit of a rally here and then fail. That's where we say make a lower low, lower high, and then lower low. That's the kind of pattern we want to see. It does look a little extended here, but like I said, I'm looking for those bear rallies to fail. I think those will be a good setup to kind of look into. So a lot of the things that you look at, they are already kind of look extended. So I think a short-term correction would be a healthy correction to kind of jump back into those bear rallies. Now the Swiss franc and Swiss franc also done the same thing. It's kind of broken lower. I mean, if you take a look at longer term chart, you'll see like, okay, well, this is failing at some key levels here. So it's a lot of a lot of these runs that looks like they're kind of come to an end with this little break over here. So I do like euro better than Swiss franc, but I think this is where you pay attention to euro Swiss franc to find out which one is performing well and the worst. Right now, you can see the euro is definitely more underperforming. Now, if the euro does bounce a little bit here, I wouldn't be surprised that we see a bit of a relative underperformance is in Swiss franc. But again, both the European currency seems to have changed a little bit. Now, let's talk about pound. I know a lot of traders I've talked to said I do like the pound here. Well, I still like the pound here. I think this is where if the euro takes a break, if euro sort of bounces, I think the pound likely to underperform. And that's exactly what we're seeing. We saw the euro outperform last week, the pound underperform, and vice versa. So we're getting a little negative correlation between euro and the pound. As you can actually see that in the euro pound currency pair, where, I mean, look at that big, the negative correlation there, and we're getting a big little pullback here. So I think for the shorter term, we're seeing a big sort of a correction in the euro. If euro stabilizes a little bit or has a bear rally, I think the pound can weaken. But overall, as you can see, it is below the 20 to 52 moving average. I'm not interested in buying the pound here. Now, let's talk about growth currency. So CAD, I put this chart in the Discord this morning just to kind of highlight, well, we are seeing CAD holding steady, but it's not really breaking out yet. So until they really break out, this is still what I call top of the range for me. So the CAD is not really screaming out a buy or a sell to me. Now let's talk about Aussie and the Kiwi. Well, you can see that the Aussie has stayed in this little range for the most part. And, this is one thing I was talking earlier about, is the levels getting broken. And we are seeing the Aussie being back and forth trading here. But if it does fall back below in that range, you can see that then we will fall back into the bottom end of the range. So that's a bottom end of the range over here. I think we'll probably see a bit of a further weakness there. Overall, you can see that the Aussie have kind of held steady, but we can easily see that turn into some relative weakness there. Here we are with the Kiwi, and as you can see, this thing is also range bound. So both the Aussie and Kiwi are or have been range bound for the most part. I mean, I can't believe that if you take a look at this range in the Kiwi, we have been range bound since April. So you can see that prices did stall over here. So in the shorter term, I think prices can come down towards that bottom end of the range. Again, who knows if it's going to break out, but trade the range until you see those ranges getting broken. One thing I want to talk about is Aussie Kiwi. So if you take a look at it, I'm looking at the divergence here. A euro versus a Swiss franc. Euro against a pound, or even Aussie against the Kiwi. So this is the one chart that, paying close attention to, because again, question is Aussie is a better short, or is the Kiwi was a better short? This goes back to this Aussie Kiwi. You can see a big sort of a divergence that took place, and we have kind of gone sideways for the most part. If this fall below this 109 area, I think that we can probably see Aussie underperform a little bit here over the Kiwi. So overall, we have liked the Kiwi short better, but I won't be surprised if that switch between among the Aussie and Kiwi, and Aussie actually gets a little bit weaker. We have the retail sales coming out tonight. We also have the China's number tonight, so maybe that will be a catalyst. We'll have to wait and see. But again, I'm looking for a close below that 109 would be a good indication. But right now, as you can see, this is sideways. So this is again telling us that Aussie and Kiwi kind of doing the same thing. So that's really where we are. Let me take a look at some setups here. What we just looked at. Let's take a look at some setups here. John says dollar CAD. So yes, the dollar CAD I posted that in the Discord this morning as well. This is another one from a technical standpoint. It had cleared out the resistance. So yes, beautiful little setup. 1, 2, 3, 4, 5 days of run here in this dollar CAD, which again kind of looks very similar to what the dollar basket is looking like. So it has broken out. Absolutely. I think this prior level of resistance becomes the support, which is about 137.60. On the upper end of the range, we are about 140. So At this point, again, like I said, I want this to hold this level, this breakout. We want this is the prior resistance is now the support. We want this to hold that level. So as long as it holds that level, I wouldn't be surprised if we do some profit taking in between. It already looks kind of extended for 5 days of run. If it does pull back, the question is that pullback is a good buying opportunity. So this is the kind of setup that I'm looking for. So I do like the dollar CAD. Now let's take a look at the 4-hour chart. So I always start with the daily, start with the top-down analysis, start from the higher time frame to the lower time frame. So, all right, my trading view seems to be a little finicky here. But anyways, let me remove this here. So yeah, on dollar, on a 4-hour chart, again, same thing. I do like it. I mean, look at this beautiful setup on a 4-hour chart. It did break out above it, prior support or resistance became the support and rally again. So yeah, I do like this one. I think it's just a matter of finding the right setup. Do I want to enter right here or do I want to enter on pullbacks? So I would rather look for some base or some pullbacks to buy into. As long as we have determined what the direction is, it's much easier to trade because then you're looking for the right setup. So I think this one has definitely made a turn. So I do like it here. But the question really is, is this the dollar trade or is it the CAD trade? I always like to point that out. From a technical standpoint, we love that. But dollar and CAD kind of doing the same thing. So the best movement you're gonna get is in divergences where things are moving. So for example, Aussie dollar. I posted this in the Discord this morning as well. And again, this is something. Look at the daily chart. I mean, this is a confirmed break. I mean, last couple of times we held above above this moving averages. Now you can see that we were sitting right at the support before we get that break. So this is again it breaks below that 65 level. I think this one is the one I really like here as far as the risk to reward goes. I think as long as it stays below this level, any sort of bear rally or any sort of base, we would love to kind of short into. Now, here's the 4-hour chart. As you can see on 4-hour chart, now we are making lower highs and lower lows. So this is just made a lower low. I would love to kind of see this make a lower high and kind of go lower. So the thing is that right now, like from a chart perspective, everything looks clear. But when the news event comes, when the FOMC comes, or when the jobs report comes, now things can change drastically. So if we get the data that's supporting our setup, I think that's great. If we get the velocity that kind of just goes the other way, then that's where I like the setup. I just need to be patient. Let the price kind of tell you when is the right time to jump back in, because we are at some extensions. That's where we're sitting here. But Aussie dollar is another one that I really like. All right, there it just says dollar Swiss franc on 1 hour, looking for a good place to enter. All right, let's take a look at that. So dollar Swiss franc, euro dollar kind of falls in the same category right now. But let's just talk about dollar Swiss franc. Well, now you're set on an hourly chart. So I'm just assuming that you're looking to trade this shorter term because, your chart time frame dictates how long you want to hold that position for. So if you're looking for an hourly chart, you're looking at velocity. You're looking at velocity, meaning, when we get the FOMC, you're expecting the dollar to really gain off that news as well. So, if that's the case, I mean, what's the setup here? This is the prior resistance, which is now the support, 80.80. It's sitting at about 81.05. It's in a pullback formation here. Let's just go on the daily chart and then we'll come down. On the daily chart, I mean, love the fact that we just got above this 50-day moving average. I mean, the candle is not finished yet, but this is an interesting one. The question really is that, do we expect this to keep running or do we expect prices to maybe pull back a little bit here? I mean, it does look extended to me. But again, if you're looking at an hourly chart, then this is your setup. This is a little high base or, sort of a bull pullback kind of a formation happening. Anything above 81.20 looks decent with our stop right around 80 area. So that's the one that we do, that I do like here. That's the setup here. Now, when I go on a 4-hour chart, I don't love the candle here. I think we probably due for some sort of pullback here. So again, different time frames, different objectives. Always want to make sure you have the right objective with the right time frame. But I do like it. Again, I think anything that you look at on an hourly chart would look great right now. It doesn't matter what it is, but it does sort of on the extension side here. So yes, we did pull back a little bit here. We'd love to see a little bear rally to short it too, but this is the prior support. If you're looking for a break, then look for those breaks. The levels from earlier today are those levels that it needs to break. But yeah, good. Good question so far. I'm glad that everybody's looking at the right place. I think the only tricky part is that we have moved so much already. Do we get news will be supporting it, or will we get news that would, maybe hurt our trade for a shorter term, where maybe dollar pair back? A lot of times you hear the term dollar pair back some of the gains. That's something that we can definitely see. But in a nice direction, what happened is that those pullbacks are short-lived. And that's exactly what we're looking for here. Here's another one, euro dollar. I personally like the euro dollar better than euro Swiss franc or dollar Swiss franc, because again, we looked at euro Swiss franc. We're seeing a little bit more relative weakness there. But same thing, 4-hour chart. Look at this little, below base here, another base over here. I would expect another base to form over here. It does kind of look extended. Here's the daily chart. It actually broken both below the 20 to 50. So one thing is for sure is that if you have been on this long euro dollar bandwagon, I think that's changed. That's changed just this week in the last 3 candles. I think that has changed. So if there are bear rallies, we want to see those bear rallies, but doesn't mean I want to buy those bear rallies. I think what I want to see is, maybe a rally get to a certain point and roll over. Those are the best looking setups here. But in this situation, you can see it did make a lower high and it just make a lower low. So we're getting a nice little trend change over there. All right. So John says, explain the rate of change indicator, please. So rate of change is an indicator that's available on ROC. You can see rate of change. You can see that's available on TradingView. What I've done is that in the settings, I've made this to a 1 candle because I want to see how much it's moving on a day-to-day basis. I think by default, you get a whole different number. So I'm mostly look at this on a daily chart. This is a one length. So when I'm looking at the daily chart, then it tells me how much it's moving on a day-to-day basis. So that's what it does. So it's just telling you a movement, how much is moving so far for the day. That's what it does. So it gives you a percentage on what the movement is so far. So again, this comes in very handy, especially as you're doing more of your analysis and trying to find out how big is the move, how this move measured to the previous times. Like in this case, you can see this is a notable week, but that's really where the biggest move have been taking place. Hope that makes sense. If you have any questions, just let me know. ATR. So yes, ATR measures volatility. Rate of change, it's not measuring volatility. It's just telling me how much something is moving. So I'm looking at this on a percentage change. It's not telling me, okay, well, rate of change is telling me if something's strong or weak. No, rate of change is telling you how much is something stronger or weaker for the day. Now you can play with the settings, and I think by default it comes by 4 days or 5 days, 5 periods, 5 candles. So you can play around with the setting. What I personally use it for is mostly to see the percentage changes for the day-to-day basis. So that way, at least okay, well, where am I sitting at as a percentage change? Is this the biggest move already happened? A lot of times, things don't move indefinitely. Like we have measured move percentage-wise. So a lot of times, as I looked at the dollar, I said, hey, dollar is sitting at about 1.5% change for the week. So again, this is just telling me that, okay, this move is on the upper end of the spectrum. So a lot of times that's where you can take a look at it and say, well, I think, the big moves already happened. So That's what you really use it for. ATR, on the other hand, does measure the volatility. All right, let's talk about another thing here. So we talk about the dollar. We know where we are sitting at with the dollar. We'll see what the FOMC statement comes out. With the statement and also the press conference, we'll find out what the dollar is going to do. But now the next one we need to prepare for is the Japanese yen. So the Japanese yen is where, I do like yen on a shorter side. We can see that every time it has rallied, it has stayed below the 20, the 50-day moving average. So overall, yen looks weak. In the shorter term, yen is definitely on a bit of a bear rally here. It's not, or it's more range bound. This is a 4-hour chart, and you can see yen is more short range bound. So what's the first thing we're going to take a look at for Japanese yen? And I think that one is the dollar yen. You can see that the dollar yen has stayed mostly sideways for the most part. I mean, this is a pretty wide range. If you look at it from April till now, we have stayed between 142 to 148. 149 is pretty much the level of resistance here. So as you can see that we are right up against that resistance, not breaking out yet, but we are right up against that resistance. So what we're going to look for is which way this thing is going to move. I think, if last year, if you can see, like we had a massive move. Again, this was based on based on some of the carry trade unwind that happened. But, here we are. You have seen dollar yen, deviate, and especially when dollar has done really well, especially if you look at last year, dollar was doing poorly until, October. It really started to pick up, and dollar yen kind of did the same thing. And I think this is why dollar yen is an important currency pair to take a look at right now. And if the dollar yen does break out above that 149, again, the next level of resistance is at about 151. So that's the one I'm paying close attention to. Again, from a chart perspective, I mean, I love the chart here where it did break out. The prior resistance became the support, and we are back at the highs here. So, if I take a look at my bias, I don't expect Bank of Japan to do anything. And I think that will ultimately will be bearish to yen. And if that's the case, I think dollar yen will be the first pair that I will be paying attention to. And if the dollar yen doesn't break out above that level, then again, that 146 to 149 is the level of range that we're looking at. So again, this one, I'll be looking at it overnight, primarily for the Bank of Japan rate statement. And that again will lead me to tomorrow. Perhaps we can take a look at more yen crosses than the dollar. Again, so far, dollar has been the big mover. Maybe we can start to see some movements in the yen pairs, but something that we'll have to wait till overnight. So that's a news play. We'll take a look at it overnight. But right now, as we take a look at the next hour or next half an hour, we have the FOMC rate statement coming out, followed by the press conference. That's the one, again, I'll be taking a look at what happened with the dollar yen here. And then we'll see what happened with the dollar itself. Dollar does look extended. Like I said, I wouldn't be surprised that if it does pull back or prepare some gains. But, for me to buy any dollar pair, it needs to break above the highs that we saw earlier. But at this point, I think it'll be healthy for dollar to sort of pull back a little bit here. So that's the game plan here. But I want to be still a buyer on those dips in the dollar, because that's really where we are at in a lot of these pairs. But overall, again, great movement so far. And, as a trader, you just need to know when the markets are great and when markets are not so great. You want to be active when markets are doing really well, and you want to be less active when you're getting a lot of ranges. And I think that's really what we have seen so far this year. It's just these ranges, going back to early this year. I mean, look at Aussie has been mostly range bound. We have Kiwi mostly range bound. So we have seen things move. Like Euro was a great mover so far this year, even the Swiss franc. But, you have to kind of trade, the direction and the currency, right? If you see range bound price action, that's where, your direction strategy will be less effective but then buying around support and selling out of resistance becomes the more effective strategy. And market doesn't stay the same. If markets changes, if the direction changes, then we want to be, make adjustments accordingly. But right now, I think is the dollar making a trend change? It looks like it. So I think this is where you need to start adjusting your strategy and start looking at more on the directional side versus looking to trade the range. All right, let me know if you have any other questions. Otherwise, we'll wrap things up here. And again, we'll wait for the FOMC statement. All right, so let's just wrap things up here. You'll see a whole lot of questions, but news is really what's going to drive the movements here. If things are looking extended, we'll wait for a little bit. Look for the energy to build up for a continuation pattern. But I think things can still pretty change from today until Friday with the U.S. job support, FOMC, and Bank of Japan overnight. Still a lot of things to pay attention to. If there's anything comes up, I'll be posting that in the Discord, so make sure you check that out. I'll look for how things turn out today, and then if there's anything I see, I'll just go ahead and post it there. But again, good job this week. I think it's been a good trading weeks for everyone. So great job. Let's just wait for the rest of the week to unfold, and I think there'll probably be more opportunities to be had. Well, thanks for joining here. We'll see you the next one. Happy trading.